Hey guys, today we're going over some stocks that could double in my opinion. And I'm going to show you all the numbers for yourself. I'm going to talk about what the companies do so you can kind of draw your own conclusion. Don't just believe me, always do your own research. But check this out. Our Robinhood account actually hit an all-time high today. And one of the stocks that we're actually going over today, I own in my Robinhood account. And it's not in my taxable account here, it's actually in my Roth IRA. But yeah, I just want to say our 2024 was a great year, and 2025 we're already starting off to a great start. We're almost up 8% year to date. But let me show you this first company right here. Now, this is a small company, a $3.3 billion company, but wait till I show you their investor presentation. I'm going to quickly show you a few of my favorite financial metrics. Then we're going to head over to their presentation. But they're a $3 billion company. This is DigitalOcean. They're in the cybersecurity industry. And first off, look at this company's net income. So this is a profitable company. They used to lose money every quarter. Now they're making a ton of net income. And look at this consistent sales growth here. Numbers are up 12% year over year. Just some incredible growth. And some people might have some worries about this balance sheet here. This company actually does an insane amount of buybacks. They have a very healthy balance sheet. I'll show you that later. And look at the free cash flow of this company. They're making a lot of free cash flow. And I'll show you two more metrics here. Then I'm going to show you their investor presentation because this is super impressive. So look at this. They have $440 million of cash. And if we head over here to their total debt, it's $1.48 billion. So they could pay off 1/3 of their debt right now if they wanted to. And you saw how much free cash flow and net income they're making. They could pay off the debt if they wanted to. And check this out. Because they have so much cash on hand now, they're actually making more interest than they're paying in interest payments. So they made $2.5 million of net income in the most recent quarter simply because they have so much cash on hand. Look at this. Their cash from 2022 went from $140 million all the way up to $450 million in the most recent quarter. So that's why they're now making more interest than they're paying in interest. So check this out. Here's their most recent investor presentation. I'll try and walk you through this so we can better understand what the company does. They simplify cloud computing so builders can spend more time creating software. So that still may sound a little confusing. I'll try to explain this a little more later. But what we can understand for now are these impressive, financial metrics here. We can see their sales growth since Q3 2023 to right now. It's up 12% year over year. Look at their non-GAAP diluted net income per share. It's up 18% year over year. So really impressive. We can see their rapidly growing market. It grows at a 23% CAGR, compound annual growth rate. You can kind of read a little more here, but what's most impressive, oh yeah, check this out. We can see all their kind of innovations that they've done over the years, but I want to show you their buyback program. Let me scroll down and find this down here. So yeah, look at this. Look at their diluted weighted average shares outstanding. In full year 2022, it was 118 million. Now it's down to 103 million. So they've bought back, 18% or, nearly 15% of the company just in 2 years. But yeah, here's their financials right here. We can see their revenue growth. In 2024, this is so far because this is the third quarter of the year. We can kind of see their EBITDA so far and their free cash flow. Net dollar retention rate, I believe this is annual revenue per user. So the average annual paying user pays $102 a year for their software, which is kind of cool. So I'm just really liking the financials here. And that's why I think this one could potentially, double in stock price. Builders and scalers that spend more than $50 per month. Yeah, look at that. It's reached a new record. It just grows every single quarter. A lot of people are liking this company's products. So yeah. All right, so for the next stock that I think could potentially double is PERI. This is Perion Network. Now, I have had a love-hate relationship with this one. We've been buying this one for years, and it just keeps on going lower. And if you're wondering what happened to this company, why has the stock tanked? Well, if we look at their sales right here, the revenue is down 44% year over year. This company lost their growth. They actually lost a contract with Microsoft in their Microsoft Bing search engine, and it sent this company in the toilet. Now look at the market cap right here. It's a $417 million company. Keep in mind, they literally have zero debt with $390 million of cash. So they're nearly trading at cash value. So nonetheless, I would keep this one to a very small allocation. Let me show you this investor presentation and a few more metrics here because I think it's really impressive. So yeah, check this out. They literally have zero debt right now. That's why it says zero. And if we look at the cash on hand, they literally have $383 million of cash. And since they have a ton of cash and no debt, look at the interest that they're making. They literally make $5 million plus of interest every quarter. So that's where this high interest rate environment really helps out the company. Look at that. They were raising rates in 2022. They had the same cash on hand. Now they're making a bunch of interest on their cash. And on top of this, right now, they're even doing some share buybacks right now because the stock price is so suppressed and they're trading at cash value. Even the company is buying back a little bit of the company. You may be saying, oh, they only bought back 20 million and 13 million. Well, remember, the whole company is worth $417 million. Imagine if they, bought back half the company at these shares. I don't know. What they're actually doing is investing in the future. And let me show you their investor presentation right here. Let me show you their main growth drivers right now. So this is what they're mainly focusing on right now. Their digital out-of-home advertising, retail media, and CTV. And it's what they're not including here is their search engine, their search revenue, which is down like 50% year over year. But because that's down so much, here's what they're investing in now. Check this out. We can kind of see their success of the digital out of home advertising went from 11 to 19 million. That's a 63% growth. We can see their retail media went from 6 million. This is for the same quarter, Q3 here, from 6 million to 21 million. 62% growth from the previous year. And their CTV revenue. Now, again, it's only $9 million, but they're only a $400 million company and they're debt free, which is really impressive, But again, the company could still do bad. I'd keep this allocation to a low here, but yeah, this one's up 19% year over year. We can see their financial outlook here. Yeah, look at this. Their net cash of 383 million, and look at their GAAP net income. They're 2 million. And adjusted EBITDA is 7 million, so not great. But yeah, we can see the revenue right here. It's the lowest it's been literally since 2022. And that's because, look at their search advertising revenue right here. They went from 86 million down to 20 million. A bigger decrease than I thought, a 78% year over year decrease. That's because of the lost contract with Microsoft's Bing. So I really hope that this growth of these three other advertising businesses could really help out the company. We can kind of see some of their partners here who use their Perion network right here. But yeah, so yeah, that's why I'm definitely not selling out of this company because I can't sell out of them at this insanely low valuation. Literally cash value is what they're pretty much trading at. But let me show you this last company right here. This is one I actually own in my Roth IRA in my Robinhood account. So check this out. I'm going over ticker symbol INOD. And let me show you, this one's down 10% year to date, and we're down 7% on my one share. I promise you, as soon as I get paid next, which is in, like a week, I'm going to be buying more of this company for sure. So come back to my next portfolio update. You'll see how many more shares of this company that I own. So let me show you their numbers for yourself. You're probably wondering, what does this company do? Well, let me tell you about some of their most popular customers. Microsoft, Meta, Google, and Amazon are all customers of this company right here. And look in the top right, the market cap. They're only a $1 billion company. So that's why I think there's room for this company to double. And look at this organic sales growth. It has more than doubled from the previous year. And if you look at their net income as well, their net income just exploded to $17 million. And if we go and look at their operating cash flow as well, it just exploded also to a new high. So let me show you a few things I just absolutely love about this company. In my opinion, they will impress you. That's why I own some of them. So first, we can see their total debt. It's pretty much nothing. They have $8 million of total debt. And if we go to their, cash on hand, they have $26 million of cash on hand. So they could literally pay off all their debt right now if they wanted to. And if you look in the most recent quarter, they made 51 cents of diluted normalized EPS. Now, if you annualize that number, that would be $2 per share. And the stock price is $37 a share. So they're trading at like 17 times this quarter annualized. Now, that's a bit of a stretch for me to do that, to annualize the most recent quarter, but let me show you their investor presentation here. It's so impressive. So here is InnoData's most recent investor presentation, Q3. And like I said, 5 of the Magnificent 7 are customers of them. The only ones that aren't is Apple and Tesla, which, is fair enough. And check this out. They're positioned as the pickaxe and shovels beneficiary of the AI and Gen AI race. Everyone wants to get their own Gen AI software. And look at this organic revenue growth guidance of 92%. And I actually think they're going to beat this number. But this is some crazy organic growth. Now, what they do is still a little bit complicated. I'll try and explain it here a little bit better here, but because they do so much different stuff here. And check out this growing industry. They expect it to grow at a 41% CAGR through the year 2032. Literally 41% growth every single year, which is just an enormous addressable market that there's so much, runway for growth for them to have. We can see some of their financials right here. 136% year over year organic revenue growth, plus 3 new big tech customers won year to date. This is Q3. Adjusted gross margin is a 44%, and that's adjusted. And their adjusted EBITDA margin, or I believe that means margin, is a 27%, 26 million of cash. Their market cap is only $1 billion. I feel like there's so much room for them to grow. Look at their sales year to date. It's only 137 million. It'll probably be closer to 200 million by the time the year ends. So they do services and software as a service, which is only 11% of the revenue. Services are 89%. And yeah, just look at this incredible growth. They should just keep on growing. I don't see why this growth would stop. It's just beginning, especially with the compound annual growth of the whole industry of 41%. Adjusted gross profit, adjusted EBITDA. Look at it just since the previous year. Is just incredible growth, the most amount of revenue they've ever seen in the most recent quarter. And I think it's just beginning. So yeah, most of what the company does is from their digital data solutions. This is 85% of their business, and you can just see this incredible growth, organic growth up 180% year over year. Now they also do something called agility. I'm not too familiar with it, but look at the growth here. This is up 26% year over year to a new record. Now that's only 10% of their business, but there's a lot of runway for growth there. And we can check out Synodex. Not sure what this is. It's kind of just flat, but that's all right. So yeah, this company, they made 10 million of free cash flow in the most recent quarter, 17 million of net income. Great and healthy balance sheet, amazing customers, amazing industry in my opinion. The only thing that might turn people off is how much they've appreciated so much in stock price. Look at this. Back here, literally in 2024, they were $5. April 2024, now they are $40. But I still think there's more room for growth here. Remember when we looked at their diluted normalized EPS, they made 51 cents in the most recent quarter. They're trading at roughly 18 times that quarter annualized. And this is just a pure growth company. And this is one I plan to add more. Of course, as soon as I get paid more. I get it. I literally only own one share here in my Robinhood account. But these are the kind of companies that I look for and that I want to own. So yeah, that's the 3 stocks that I think could potentially double. Let me know what your thoughts on these are in the comments. Again, there's still a lot of risk. Always do your own research. Nothing in this video is financial advice, but if you did find some value in this video, I would really appreciate if you drop a like button. It really does help me out a lot. And if you leave a comment, I will respond to every single one of them. I just enjoy doing that.